Just before we go into Netcare, let's get your overall view on the market momentum that we're seeing across global markets and on the South African bourse today.
Evening, Bronwyn. Just strong. We opened this morning about 150 or so points up. Largely went sideways for the day. Late afternoon, about 4 o'clock, suddenly another jump higher. But we're seeing it not just in our equity market. As you said, we're seeing it globally, but we're seeing it in commodities at the same time. Gold, platinum, oil, even in the zincs and the palladiums, etc. Everything moving strong. And I think the word you said there was the right one. It's momentum. This market is just moving and it's moving upwards.
Well, private hospital group Netcare has reported a 27% rise. That's in annual headline earnings per share, as lower interest rates in its home market and reduced debt help it to save on finance costs. Revenue rose some 6.9%, that's to 23.2 billion rand, and operating profit grew 9.8%. Netcare, which runs private hospitals in South Africa and Britain, gave a relatively cautious outlook for the year ahead, saying regulatory pressures are to cut pricing. They could offset an increase in demand. Now, Stephen Gagnon spoke to CEO Dr. Richard Friedland just a short while ago about the numbers.
Clearly, we're operating in very difficult markets, particularly in the United Kingdom. So I think the result there is all the more pleasing. But I think what it does demonstrate is such is the demand for healthcare that despite and in spite of the underlying economic conditions, people still require healthcare. In South Africa, I would see the rise in demand also being driven by job creation. So it remains to be seen into 2010 whether that can be sustained.
Well, going from job creation perhaps to job losses, because in the UK there have been extensive job losses. How has that affected the private healthcare sector in the UK? Have you seen customers losing their medical insurance? Medical
insurance, private medical insurance as we know it, or medical aid, has been reasonably stable in the United Kingdom. It may come under some pressure next year, but in the long term we see that as growing. What we have seen is a fall off in self-pay patients, in other words, patients paying cash or out of pocket. Fortunately, in the United Kingdom, that's been offset by a tremendous growth in NHS, government patients electing to use the private sector. There is something known as choose and book. If you are waiting more than 18 weeks for an operation, an elective operation, you can choose to come to the private sector. And as we've seen self-pay come down and it's now stabilised, we've certainly seen a rise in NHS patients. And is that something you think is going to continue in the UK market? Very much so. We're predicting that that will increase and continue to do so, given the pressures in the UK and some of the funding pressures on the NHS itself. We think self-pay will recover over time, but as a percentage of the work that we do far less NHS work than our competitors, so there's still some room to go there. Has the decline in self-pay really been as a result of the recession, do you think? Oh yes, it's an out-of-pocket spend, and I think people are becoming more prudent and more careful as to what they do with disposable income. We're less exposed to that in South Africa because probably more than 90% of the work we see is medical aid related and not out of pocket. Just looking at the South African market, because you have seen growth in private healthcare here, how do you think that's going to be affected when we do get the national health insurance, if we eventually do get the national health insurance? I mean, are there opportunities for you there, or do you think it could draw away business? Well, I think there's significant opportunities, and I think this is a time for the private sector to work with the public sector. The debate around healthcare reform is a global one. It's not just a South African one. What is different in South Africa is the unique reasons for why it's come about, but we do need to bridge this gap between haves and have-nots, and I think the private sector is ideally placed to play a very meaningful and significant role in broadening access to healthcare.
Simon, what do you make of this stock? 12.25 rand, closing up over 2% on the day. And certainly the concern is that increased demand for private healthcare is going to be offset negatively by increased regulatory pressure, specifically in South Africa.
The regulation is always going to be a trouble, and particularly in the sector, and it's a South African phenomenon, but we're seeing it in the US at the moment with President Obama there trying to get his health bill through. I don't think it's such a big threat. I think a lot of that regulation is going to happen towards the lower end, and perhaps you could say the middle end. As just commented ago, I mean, South Africa is, most people, the vast majority of the middle and upper class have got medical aid. If you're sick, you're sick. One of those beautiful things around this sort of industry is that people are getting sick regardless of recessions. Elective surgery is a bit of a problem. Obviously, that falls off, but the rest is still happening there. I think it's a good stock. I think the balance between the UK and South Africa is very good. Obviously, the currency plays a bit of a risk there as it strengthens against the pound. But they brought their debt back down. That's helping them, particularly in the lower interest rate environment. All in all, I thought a really good set of numbers and a really good-looking company.
It has run, just having a look at that one-year graph, up 75% over 1 year. So again, to use that term, the easy money being made on this one.
Absolutely, and it's run particularly hard because of that defensive nature. A year ago, when everything was getting really, really rough, people were probably not selling Netcare as much, and perhaps even there were people buying it when they were selling other areas, particularly financial stocks, industrials, and the like. So these sort of stocks particularly hard, and we can say the easy money's been made across much of the market. But in defensive stocks like Netcare, they're going to do less well in the really good times. So if we look at a growth for next year for market as a whole, we can probably expect Netcare to underperform the market as a whole.